The price of Bitcoin, unfortunately, is down about 15% from its all-time highs this month alone, in August 2022. Let's be honest, there is quite a bit of negative sentiment out there, and the macroeconomic news isn't helping things. And so a lot of analysts are suggesting the uptick that we saw in crypto these last few weeks was only ever just a relief rally. But you can't be too myopic in this space because experts still strongly believe that Bitcoin is the way forward. And the biggest evangelists out there still hold firmly that by 2030, Bitcoin will cross $1 million. And everybody not only wishes, but expects that to happen. But at the end of the day, candidly, who cares about the experts? What should you be doing exactly in this moment? Should you buy? Should you sell? Should you hold? In this week's on-chain Bitcoin analysis video, we're letting you guys, our subscribers, know what we at Altcoin Buzz are doing under these precise conditions. And if you're somewhat newer to the space, don't forget our promotion we have going on right now with our friends over at Binance. You can get up to $800 in all these various bonuses. Check out the link in the description below for more information. Welcome to the channel. My name is Maddie and this is Altcoin Buzz. As a friendly reminder, whether we're talking about Bitcoin or other altcoins, just keep in mind that all of this is a volatile space. And yes, there is corresponding risk when you're involved in cryptocurrency. So this video is meant to be informative in nature. Do not take it to be official financial or investment advice because it's not. All right, with that being said, let's take a look at today's first Bitcoin on-chain indicator, which unfortunately tilts in the bearish direction. It would suggest, based on the metrics, that it may not be the right time to buy Bitcoin at this moment. So as per Glassnode, 80% of the total Bitcoin supply is held by long-term holders, or LTH as we're going to call them. So you can imagine the kind of impact that LTHers have on the market. It's pretty substantial. And just for your knowledge, by the way, long-term holders are wallets holding Bitcoin for more than 155 days, which is just under 6 months. STHs, you guessed it, short-term holders, have wallets holding for less than 155 days. And at any given point in time, you can look at the ratio of LTH to STH and then look at the 155-day moving average of that ratio. With that, you can decide whether you should buy, sell, or hold. And at present, this chart seems to be giving us a big signal that we could be looking at a correction from here, unfortunately. Look, we don't take any pleasure in reporting that, but the numbers are the numbers, and it's our job to report on them impartially. There's also another event happening that could lead to a further correction, but before we talk about this, let's take a closer look at this particular chart. So it's very evident in the image that the moving average is dipping back below 1. Now, the last two times the moving average, the MA, moved from above 1 to below 1 were in 2016 and 2018. And the market declined subsequently, right after, in fact. And right now, we're also seeing money flowing out of big caps into small caps. And so if a correction does happen, it's just another chance to add to our long-term bags. Again, that's the silver lining as we look at it. You have to view the opportunity in every catastrophe, even sub-catastrophes. Now, the other event that we haven't been talking about that could very well lead to further correction is that Mt. Gox Bitcoin is getting ready to hit the market. It's 137,000 BTC, or $2.8 billion worth of Bitcoin at today's prices. So the question is, can the market absorb all this Bitcoin? Probably, yes. But can the market absorb all this Bitcoin without any downward pressure on price? That's not so certain. In fact, probably not unless the repayments are on a staggered basis over many different tranches. We always want to hope for the best, but we must prepare for the worst. And in that spirit, it may be best for you right now to brace for another deeper correction. But look, if that correction does happen, you have an opportunity to fill your bags during a bear market, which is the best time to do so. And if that's something that you're looking to perhaps do, let me remind you about our Binance offer where you can sign up to get $800 in bonuses upon sign up. You can sign up using the links below on Binance Exchange and get the following benefits. There's $100 as a sign up bonus, 20% trading fee discounts for life, a free $200 worth of Altcoin Buzz Access Pro membership. That's 2 months for free, plus $500 in Unlockables. Check it out. Again, details can be found with the links in the description below. Okay, our second big indicator here to help balance things out is bullish, and it purports to tell us when the market will potentially move up. So we're looking at MVRV, or market value to realized value. This is another indicator that we have talked about before, And right now it shows us that we are near the market bottom. Often this metric bottoms out at 0.9. And at this level, weak hands have been flushed out. Only strong hands that intend to keep hodling Bitcoin remain. And so this indicator is, like I said, bullish. Now, notice that we already had one bearish and one bullish indicator. And if you're confused, no need to worry about that. Sometimes these indicators can be conflicting, but we got to examine them in their totality. That's the idea. And that's the reality. In fact, indicator number 3 is oscillating us back towards bearish. We're looking at Bitcoin selling pressure here. And if there's one thing that we've said really from the beginning of this bear market, including the Luna fiasco and 3 arrows, all that stuff, all that nonsense, it's the fact that the market problem is a liquidity problem. Because lack of liquidity leads to lots of forced liquidations and redemptions that we've seen that unfortunately we continue to see. And so adjusted SOPR is a way to measure liquidity specifically. Now, SOPR, or if you're not familiar with that acronym, spent output profit ratio, is another indicator that we've discussed before. And the adjusted version measures all wallets that are at least 1 hour old. So it's how profitable holders effectively are with transactions that are at least 1 hour old. And this eliminates very short-term traders, some day traders and scalp traders, and therefore paints a more representative picture. And as you can see in this image, the adjusted SOPR is rising, meaning holders are more profitable once again. Now, this increases the chances of selling because, yes, they have an opportunity to sell at a profit. Now, this new liquidity, especially combined with the Mt. Gox coins, could easily create a flash crash. In this market, we don't see enough demand on the buy side to absorb this new liquidity if it comes to the market. But for every bearish scenario, there is a flip side bullish scenario. And for our last indicator today, we are considering a bullish scenario in the form of open interest, which is declining. Now, open interest is the number of futures contracts out there in the market. And every time someone opens a new futures position, it adds 1 to the total open interest. Closed positions reduce open interest. And right now, open interest is declining, which is a good thing in our view. People are closing their positions, which is a bullish sign because it means that there is more potential for a short squeeze because there are not really a lot of short futures positions out there. And a short squeeze is when the shorts help add to a rally by having to buy to cover their unprofitable short positions. Look, in general, in my opinion, there are far too many futures positions in this space, far too many leveraged and over-leveraged positions. So a decline in this metric is a good thing. All right, so it's a mixed bag of indicators, but in the end, what do we have? 2 bullish indicators, MVRV and the decline in open interest, and 2 bearish indicators, LTHs to STHs and adjusted SOPR. So what should you do now? Well, if you're doing what we've recommended in this series all along, and that's DCA, by the way, dollar cost averaging into Bitcoin, then all you have to do is continue that strategy. And it looks like things are neutral to bearish in the short term with good potential for this to be the last leg down. That's if there's no huge macro event that pulls everything downward, because those kinds of black swan events are unfortunately always a possibility, especially in cryptocurrency. But we think the last big bear leg down and the long-term buying opportunity of this bear market is going to happen sometime in August or possibly September. As always, we keep watching, waiting, and looking to add to our bags. And if that's the same kind of thing that you want to do, last time I'll mention it here in this video, but don't forget our great Binance offer if you open and fund a new account today. Once again, check out the information by clicking the link in the description below. Best of luck if you do choose to invest, although never official financial or investment advice. If you're still watching this video, be sure to like, subscribe, share, hit the bell to receive notifications. Check out these other couple of videos, including old on-chain analysis videos for not only Bitcoin, but for Ethereum. They should be popping up over here to my left, to my right. Stay safe out there, members of the Altcoin Buzz Army. And as always, we do hope to see you again soon in our next video. Take care.